For the man who has spent 2 or 3 decades building a portfolio, there is a specific kind of silence that accompanies success. It is the silence of a settled title, the quiet confidence that the land beneath your feet and the equity within your walls are indisputable. But according to a recent, sobering report from Bloomberg, that silence is being replaced by a low-frequency digital alarm. The FBI, alongside major banking institutions, is currently assessing a significant hack of a critical real estate finance tech vendor. This is not a common story of identity theft or credit card fraud. It is something far more systemic. When the FBI enters the room of a real estate tech provider, the conversation isn't about stolen passwords. It's about the integrity of the ledger itself. For the high-net-worth individual, this news signals a fundamental transition. We are moving from an era where your property was a physical certainty to an era where it is a digital variable. The knock at the door isn't coming for you. It has already arrived at the servers that house your equity. In this deep dive, we are going to look past the headlines. We aren't here to discuss the who or the how of the hack, but rather the what next. We are entering the era of forensic liability, where the burden of proof regarding asset ownership is shifting from the institution back to the individual. There was a time, perhaps within the memory of many watching this, when a property deed was a tactile reality. It was a heavy piece of paper, recorded in a dusty ledger at a county clerk's office. It was inefficient, yes, but it was transparent in its physicality. Today, we have traded that clunky security for the siren song of digital convenience. We've been told that moving property records to the cloud, automating title searches, and streamlining escrow through third-party vendors makes the market more liquid, and it does. But it also creates a black box. When you look at your brokerage account or your mortgage statement, you aren't looking at your asset, you are looking at a digital representation of a promise. The Bloomberg report highlights the fragility of this arrangement. When a tech vendor, a company you likely have never heard of, yet one that sits in the middle of your transaction, gets compromised, the black box becomes opaque. You no longer own a piece of land, you own a claim to a piece of land that is verified by a system currently under forensic audit. This is the illusion of modernity. We have optimized for speed at the total expense of sovereignty. We have outsourced the proof of our largest assets to a chain of vendors whose security protocols we have never vetted. To understand the risk, we must deconstruct the anatomy of the modern property transaction. It is no longer a bilateral agreement between a buyer and a seller. It is a fragmented, multi-layered ecosystem of vendors. When you pay your mortgage or verify your title, you are interacting with a web of intermediaries. There are loan servicers who handle the cash flow, title technology companies that digitize historical records, escrow platforms that hold funds in digital stasis, and cloud providers that host all of the above. Each of these is a link in a chain, and as the Bloomberg report underscores, the security of your equity is only as robust as the weakest vendor in that chain. Often, these vendors are selected by your bank or your title company based on cost efficiency, not forensic security. We are seeing a trend where mid-market tech vendors, who handle billions of dollars in transaction data, lack the institutional-grade security of the banks they serve. For the man over 40 who has spent a lifetime mitigating risk, this is a glaring blind spot. You have audited your portfolio, you have diversified your holdings, but have you audited the digital custodian of your title? The reality is that your most significant asset is currently being managed by a weak link you didn't even know existed. The involvement of the FBI in this real estate tech breach is a watershed moment. It signals that we have moved past simple cybercrime into the realm of systemic national risk. When the federal government intervenes in private sector tech breaches, it is an admission of a hard truth. The private sector can no longer be trusted to verify who owns what. This is the shift from trust but verify to forensic liability. For decades, we relied on the institutional promise of the bank or the title insurer. If something went wrong, we assumed the insurance would cover it. But what happens when the failure is systemic? What happens when a hack doesn't just affect one house, but corrupts the data for 50,000 houses simultaneously? The FBI's presence suggests that the integrity of the property market itself is at stake. In an era of digital fragility, the government is no longer looking for the hacker. They are looking for the truth of the ledger. This means that for you, the owner, the burden is shifting. You can no longer afford to be a passive participant in your own wealth. You must begin to view your property rights through a forensic lens. If the system cannot guarantee your title because its vendors have failed, you must be prepared to prove it yourself. We are entering a period where the sovereign individual isn't just a philosophical concept. It's a survival strategy for your equity. As we conclude this first part of our analysis, I want you to consider the weight of your own records. We have been conditioned to believe that the system is a monolith, that it is too big or too regulated to fail at the foundational level of property rights. The Bloomberg report is a crack in that facade. It is a reminder that the digital infrastructure of our world is surprisingly thin. If you are a high-net-worth individual, the strategy of set it and forget it regarding your real estate holdings is officially obsolete. In Part B, we will analyze why traditional title insurance may offer a false sense of security in this new landscape, and we will outline the Horizon strategy. The practical, sober steps you can take to move from passive ownership to active forensic verification. The goal is not to provoke fear, but to foster a level of intellectual honesty that matches the complexity of the times we live in. Your equity deserves more than a digital promise. It deserves a forensic certainty. We have long been comforted by the architecture of traditional finance. For the man who has spent 2 decades building a portfolio, the title to a property was seen as a static, unassailable truth, protected by the twin pillars of bank guarantees and title insurance. However, the recent Bloomberg report regarding the FBI's investigation into real estate tech vendors reveals a structural rot in that comfort. Traditional title insurance was designed to protect you against human error, a missing heir, a misfiled survey, or a forged signature in a dusty county ledger. It was never built for the systemic erasure of data at the hands of a state-sponsored actor or a sophisticated ransomware collective. When the Bloomberg report notes that banks and the FBI are assessing the integrity of the data, they are using a polite term for a terrifying reality. The digital ledger, the very source of truth for your equity, is no longer a closed system. If the tech vendor, the middleman you never chose but who holds the keys to your assets' history, is compromised, your insurance policy becomes a litigation ticket, not a shield. We are moving into an era where the institutional promise is only as strong as the most underpaid cybersecurity intern at a third-party vendor. For the high-net-worth individual, relying solely on the system to prove you own what you paid for is no longer a conservative strategy. It is a high-risk gamble. In legal terms, a cloud on title usually refers to a single lien or a specific dispute over one parcel of land. It is a nuisance, but manageable. What we are witnessing now, as highlighted by the FBI's urgent involvement in the tech vendor space, is the birth of the systemic cloud. When a primary real estate tech vendor, the kind of company that facilitates thousands of closings a day, undergoes a breach, it doesn't just lose data, it freezes the velocity of capital. Imagine attempting to sell a $5 million asset, only to find that the forensic trail of its ownership is locked behind an FBI forensic investigation or an encrypted server. This isn't a theoretical delay. It is a legal paralysis that can last for years. During this time, your equity is effectively trapped. You cannot refinance, you cannot sell, and you may find yourself in a nightmarish loop of proving your ownership to a bank whose own internal records have been scrambled. This is the deep dive reality. A single hack at the vendor level creates a collective liability for thousands of property owners simultaneously. The Bloomberg report isn't just a news cycle. It's a notification that your property rights are now tethered to a digital infrastructure that is proving itself to be remarkably fragile. So, how does the analytical investor respond? We do not panic. We professionalize our approach to ownership. At the Horizon, we advocate for a transition from passive ownership to active verification. This is what we call the forensic strategy. First, you must recognize that your digital portal, provided by your servicer, is not a legal document. It is a user interface. You must demand and physically store certified copies of your recorded deed of trust and your title policy. Do not leave them in a cloud that you do not control. Second, high-net-worth individuals should consider a biennial title audit. Just as you would audit your tax filings or your medical health, you must hire independent third parties to verify that the public record matches your internal ledger. If the FBI is now assessing these vendors, you should be assessing them too. Third, understand the custody chain. Ask your lender, who is the subservicer? Which tech platform hosts our closing documents? Intellectual honesty requires us to admit that the convenience of digital closing has come at the cost of transparency. Reclaiming that transparency is the only way to ensure that when the next breach occurs, and it will, your assets are not part of the collateral damage of a vendor's incompetence. The era of blind trust in institutional tech is over. The Bloomberg report on the FBI's intervention is the final warning shot for the legacy era of property rights. We are entering a period where the sovereignty of your equity is determined by your willingness to verify what the system only promises. For the man over 40, your wealth is more than just a number on a screen. It is the culmination of decades of labor, risk, and discipline. It deserves more than a digital promise. It deserves forensic certainty. We must look at our assets not through the lens of convenience, but through the sober lens of liability. This is the new reality of property rights. It is complex, it is demanding, but for those who are willing to do the work, it offers a level of security that the convenient masses will never know. Keep your eyes on the horizon, but keep your records in your hands. Thank you for joining this deep dive. I'm the Horizon, and we will continue to bridge the gap between finance and reality, one sober analysis at a time.